All right, everybody, welcome to another Power Profit podcast. Man, Chris, if I look tired, it's because I kind of am. I don't know what's going on. I've been up for hours and I feel like I didn't get a wink of sleep yesterday.
Wow, Tom, I've been feeling the same way, but mine's because our weather and this whole daylight savings time thing over the last week. I mean, come
That
on.
you would think that would work in our favor, but
Oh,
I mean, I don't know if it's that or it's the ragweed or something in the air's got me not feeling like my normal self. But I
I
mean, here
hear
we
you.
are. We're now, week ending November 10th, and what a difference the week makes. I mean, we got to talk about this hot streak that the market's been on, and I want to look at not just the stock market, but I want to look at interest rates, commodities, and I want to take a look at the Magnificent Seven because they're kind of the alphas right now of the group.
Oh, yeah.
We'll talk about, of course, we'll talk about interest rates because that's probably the biggest parallel between what's going on with the markets. And of course, Bitcoin, finally, it's trading in the 35s and not
In
just for one
fuego.
day. It's been
Yeah.
trading, just north and south of 35 now for the better part of a week. So that's exciting too.
Yeah.
So anyway, how's your week going?
Oh, it's going great, Tom. I mean, it's like I said, the weather's beautiful here. I think we're probably warmer here in Cincinnati than you are in Florida. We're at 75 degrees today. So it no
73. It's 73 here. You're the man.
75, my friend. 75. This is nuts. I don't think I've ever seen it 75 in Cincinnati during November,
In
but I'll take
November.
it.
Yeah.
Yeah,
Yeah.
I'll take it.
So
But the week's been great. Yeah.
awesome. So hey, you know what? Let's talk about this market hot streak first. So, I mean, I think it really all started the day the Fed announced that they were taking a pause. What do you think?
Yeah, absolutely. This, when you look at how it was lined up, this was a market that was coiled and ready to pounce on something. And Jerome Powell and some of the other Fed governors since then kind of gave us exactly what we wanted. This is a Goldilocks situation. We've been hearing about that higher and longer rates. Well, they kind of started to take away the higher at the meeting last week, saying that they're just going to watch the data. And then, Tom, probably the biggest thing after that, and Jerome Powell probably did one of these and said, "Whew," was when that jobs report hit on Friday. And we missed the number. It came in weaker than
Yeah.
expected. And in normal times, everybody would look at that and say, oh my gosh, the job market's starting to soften. But no, this is that Goldilocks situation where if we see a little bit of a slowdown there, that's what the Fed has been working for.
Yeah.
And employment's been, that bug that just won't go away with them. Now it showed a crack, and that is all the market needed to just take off. We got a 5% move since then. So this
Yeah,
is
so
something to
here
keep an eye on.
I have it on my screen right now, and let me blow this up so everybody can see it. So here's basically when the Fed non-move happened, when they decided to not move on interest rates, to take a pause, and then the next day we get a jump, and then here's the employment report, pop, and we
Yep.
just keep on moving up, and that's what's going on, folks. The other thing that I want to mention to everybody is you take a look at this is a 100-day chart of the S&P. And you can see the long-term trend is down, but we are coming up into an area right now where we're getting very close to the top side of this trend, of these trend channels. And these top sides, I mean, there's some resistance here. Are we going to break it? Now you take a look at that, and then you factor in where we were a few weeks ago before the drop. All right. So this is almost a month ago, and we get that rollover. I mean, we're sitting right on top of that. We get above this area here. We close above this area here, which is where we are right now, current market prices. And we very well could make a run for, I don't think we're going to end the year up here, CJ. I don't think 460 on the S&P is possible, but we could make a run to around 445, 450. And that's just further extensions of what's going on.
Yeah.
So, that's a really interesting take there. Now, let me show everybody a couple of other things too. See this red line here? This is implied volatility. So what this is we utilize this as traders, we utilize this to get an idea on what the option traders, where they feel the market's going to move to. And I'm not talking about up or down. We're talking about the volatility. The volatility moves. So prior to the Fed coming in and not raising rates, there was a lot of concern. There was a lot of nervousness going on. This was just a little more than a week ago. And then, of course, they pop in, they say, no, no mas on interest rates. And all of a sudden, we see this huge drop in nervousness. We see this huge drop in volatility as the markets were rebounding. And it tells you that not only were the stock traders of today buying the markets, but the option traders looking out 30 days, 20, 30 days in the future were saying, that's what they did. They did a nice exhale of volatility. That's also good for the stock market. Now, let's take a look at two more charts. This is the DIA, the diamonds. The diamonds, which is the Dow Jones Industrial Average ETF, same thing. I mean, we dropped down, we've popped up right after the Fed report. Volatility came down too, but the interesting thing, what's going on with the diamonds are they're already above the closing highs that happened a couple weeks ago. So the Dow Jones Industrial stocks, the stocks within that 30 group are already stronger, in my opinion. They're stronger than what's going on with the S&P. Now, I would be remiss if we didn't take a look at the Qs. So let's look at the Qs. And the Qs, again, same down move, same move up in volatility, same crash in volatility after the Fed came out and did nothing. And then, of course, also the same move where we started moving higher and we just had high after high after high after high. And the volatility has dropped down. Now, the volatility in the Qs has dropped down significantly.
Yeah.
This tells me is saying to me, what's going on in tech? Because the vols dropped down to almost summertime lows. So this is good news too. So when you go across and you look at some things, and you look at what's going on in the indices are telling us that the month of November might turn out to be a great month after all, heading into Thanksgiving. Now, let's go forward and let's do a little bit of a projection. So how can we project where prices go in the future? You're a technical trader. You like looking at trends and you like looking at breakouts and such. We can take seasonality and we can add on top of that. So here's the money calendar.
There we go.
I showed this last week, I think, but I'm going to show it again. Here's the money calendar for November. Now, last week we were coming in and we were like, wow, we got a lot of green on the screen. Do we want to trust it? Because, we were waiting for November 1st to come around. That was when the Fed decided to pause. But yet all of this remains the same because this is all based on the past 10, 20 years. And we looked at that. And now we're looking at it today. We're looking at it in week 2. And all of a sudden, we feel a little bit better about what week 3, what week 4 look like. Going into the holiday shopping season, everything is coming up green. After that, we get a little bit dicey at the week after Thanksgiving. We got plenty of time to talk about that. Right. Let's talk about what happens, between now and Thanksgiving Day. So options expire every day, but the big one's the 17th.
Yep.
We go green all the way to 17th. We go green to the 24th for those of you that are weekly option traders. You got a Friday options expiration day there. Market's going to be opened on Friday, even if it's just for a partial opening. Still going to be open on Friday, so you got expiration day. So you got a couple weeks of green going on here that, if you have bullish, if you've got some bullish strategies, if you're looking at technicals, you say, oh, I like this. If you're a fundamental trader, you think that the retail stocks got pounded really hard because we still have retail stocks due out for earnings here over the next week.
Correct.
And you have a reason to lean in to the upside. What do you think?
I agree completely right now. The one thing, and I think we mentioned this last week for our listeners or viewers, is that these seasonality trends usually turn into something that's a little bit self-fulfilling. In other words, if investors and traders see it happening, like see it actually starting to play out, that's when everybody will run into the market, and they'll run quickly, Tom. And I think that's where we are right now. This last week of activity has really just given everybody that confidence to say, okay, I'm going to go with the seasonality trend. And that makes, that's the psychology of trading. That is how these get fulfilled. That's why, a lot of this activity in the money calendar happens, is because people know these trends. So I'm with you. When I look at it, the S&P 500, if we clear this 440 on the spiders, I think a 444 is in range right now, and that kind of gets us up to the top of the distribution over the last 30 days or so. So in terms of volatility and trend, I think you're looking at a nice trade right up to, as you said, the day after Thanksgiving. Hey, Tom.
Oh, I'm here.
There we go.
If you were to have, just testing you there, if
Love
you
it.
were to have one reason why this hot streak happened, what's the one? I mean, is what's going on in Russia? Is that making the markets better?
No.
Is it what's happening in the Middle East? Is that helping to make the markets better?
No, it is
Interest rates?
interest rates. It is the one thing that everybody has been hearing about for the last 3 or 4 months. And if you want to get specific, Tom, it's when we hit 5% on the 10-year. That psychological 5% is, oh my gosh, now that you've got us backing off of those rates, I mean, mortgage applications increased this week. We're going to start seeing the effect of interest rates coming down even just a little bit here. The market's walked itself off the edge of the cliff in terms of interest rates. You're exactly right. That's the one thing.
Take a look at TLT. This is the iShares
Oh.
Barclay 20-year Treasury ETF, which was trading in the hundreds. I mean, 100 days ago, we were in the hundreds. And look what's happened. We've kind of fell down. I mean, 80s?
Yeah.
Low 80s. And then what happened about 2 weeks ago? We hit a bottom. We started trading sideways. And then the Fed decided no interest rate hike. And this moved up. Now, folks, when this moves up, interest rates get softer. They go down. When this moves down, interest rates go higher. This was the area where you were talking, CJ, about the 5%. It only lasted for a few days.
Yep.
Up, down. Then we got some movement. Now we're on the bond market is actually very much like the stock market. It's sitting on top of the top end of these short and long-term channels. If it breaks out above this, folks, then we've got ourselves a potential bottom in the interest rate markets. That is going to be good for the stock market.
Huge. And remember, that week before we heard from Jerome Powell, we saw those headlines from Bill Ackman, from Jeffrey Gundlacher, who were saying, hey, this is it. This is the bottom. We'll see if that plays out over the long term. But my goodness, that certainly gave investors around the bond market something to grab a hold of. So I think this was just intoxicating combination of headlines, technicals, when you look at the TLT and at the 5% rate. And then the fundamental is the Fed coming in and saying, hey, we're going to assess the situation month by month here. So
another one to look at, CJ, would be the US dollar. Here's UUP. Now, ignore the big pops and drops here, because this is just, I'm not an option trader when it comes to UUP. I don't trade options on it. And I don't trust a lot of the signals, the volatility signals. But if you take a look at what's going on with the US dollar now, UUP, first of all, is a double dollar instrument. It means it moves twice as much as the US dollar on average. The other thing that you have to think about with UUP is that it trades against a basket of foreign currencies.
Yep.
So it's a measurement of how's the US dollar doing versus 6 major foreign currencies. 27.5. That was back in July. We moved up to 30, almost above 30. Now we've gone sideways, and we've been going sideways actually for over a month now. The US dollar was already signaling that, hey, we're pretty stiff right now. We need to relax. And so you can see here in the last couple of days, Fed stopped hiking, dollar got a little soft. I mean, it's now in an area where, because it stopped moving up and it started moving sideways, it it let investors know that, wait a second, maybe my US dollar isn't going to continue to buy so well overseas. Maybe my US dollar, maybe all of a sudden assets are going to cost more US dollars
Yep.
in the future. Again, you know, those of you that are new to this kind of theory, keep in mind, if something costs you more in US dollars, that means that that asset is growing in value. Okay. So, you know, when you look at the pumps, you're out there looking at the pumps and you're like, wow, the cost of a gallon of gas is 20% more than it was a couple months ago. Well, you need to also think about where's an opportunity where this actually goes in your favor instead of you squeezing that pump and complaining, because it's going to happen. There's nothing you can do about that at the pump, but there is something you can do about that when it comes to investments and such. So this overview, this big overall view, it really kind of helps me when I'm first looking at trading systems, strategies, etc. I need an overall view. I need the 40,000 foot view from the 747, from my financial 747. And then I decide, all right, based on what I see in the landscape, where do I want to move to? Where do I want to tilt? And so that brings up, you know, you look at some commodities too. So CJ, oil has kind of been all over the place.
Yeah.
It really ran up. When did the Middle East crisis start? A month ago?
So about a month ago, yeah,
Yeah.
October 8th. Yep.
Yeah, about a month ago, maybe a little bit less. We were sitting near the highs we were above 80 on USO. Where are we at right now? I mean, things look a lot worse, at least from me watching mainstream media. Things look a lot worse in the Middle East and the Gaza Strip now than they did a month ago.
Mm-hmm.
Yet the price of oil has fallen. What in the world is that saying? It would tell me that there's going to be some sort of resolution over there, because the markets always precede news. They
Yep.
just do. What in the world do the oil traders know that, you know, Fox, MSNBC, and CNN don't?
This has been, you know what, Tom? I love it when I can say this. This has been the most confusing part of the market for me, the oil market right now, because we're used to seeing things trade at a premium, right? Whenever something happens, and we certainly got that. You went from 75 to a 82 or so on the USO right after the headlines started splashing across on what was going on in the Middle East. But this is the quickest that I've seen I don't know whether we want to call it a geopolitical premium, what you want to call it. This is the fastest that I've seen a premium like that taper off. And you're right. Somebody is in the know, especially if you look at the last couple days here, the USO dropping from 75 down to almost 70. That's a big move for oil. And that tends to whip a lot of things around, whether it's the oil, the energy companies. Let me throw something else at you. Everybody's starting to talk a little bit about recession in 2024, even though the Fed seems like they may fade off the stage here. We're starting to hear the recession drums beating a little more. Is this also maybe the oil market saying maybe there's going to be a little less demand for energy in 2024, and they're pricing that in immediately right now?
Yeah, it very well could be. You know, like you said, we've gotten our first round of news. What do we got? CPI, PPI data later in the month. That'll
Next
give
week,
us a little bit better understanding. I think, you know, when you go forward, you know, I do think that perhaps the big tell is going to be this. You know, look at Black Friday, Super Saturday, Sum It Up Sunday, move on to, you know, I mean, there isn't even a Cyber Monday anymore. Cyber Monday is every day of the year now.
Yep.
But I think we're going to see a softening. I don't think, you know, the Black Friday weekend isn't what it used to be. They start, you know, we start putting Christmas trees out in September, you know, and so, you know, the Black Friday sales, they were happening in October. Why wait for Black Friday? Black Friday begins now. I mean, you know, every retailer has done what mattress companies have been doing for years now. They just make up some reason to have a mattress sale, and now everybody's selling. I mean, I was October. I bought Christmas trees in October. I bought some stuff for the house I don't even think it was on sale. It was just because it was there. And I
I
thought, you know what? I'm going to get this stuff now because if I don't get it now, then I'm not going to be able to get it. I'm not even going to want to be anywhere near the shopping centers come Thanksgiving week and the weekend after Thanksgiving. But I really don't go out then anyway. I don't. So I'm wondering if we come into that week after Thanksgiving and we do get the softer numbers simply because people have already been doing some shopping. That anyone who wants to shop for holiday season probably either already has or they're going to always wait till the day before Christmas like they usually do. And you've got those folks that are going to be just spending less because
right.
they can't
Right.
spend the kind of money they used to spend because they just don't have it.
That's exactly right. I mean, inflation is finally hitting. I heard a great quote from somebody just a few days ago. They were talking about the housing market. Inflation has hit, and this was a personal financial advisor, and he said more than 60% of his clients at the right now within the last year have switched from being fine with budgets to, and this was the cute phrase he had, having too much month at the end of their money instead of the reverse, too much money at the end of your month. And that is where we are right now as we head into the earnings season or the retail shopping season. You already
Yeah.
mentioned it. The big bang is out of the way. I mean, I've already bought some Christmas gifts myself. And Tom, 3 years ago, I was a guy that was out there like December 23rd, frantically going, all right, what am I going to do for people?
Yeah.
So I think people are planning better because they know they're going to spend less. So everything you just said, and that's going to be interesting to see how it leads us into December
Yeah.
because remember, we get retail spending next week as well, along
That's
with
right.
that CPI. So that's going to be watched very closely.
Now let's take just a couple minutes and look at the Magnificent Seven.
Okay.
All right. And the Magnificent Seven, I want to bring them up on the screen, not in any crazy order, but let's start with Apple because Apple was the ones to report earnings. Nvidia still, but Apple still, they're the latest to report earnings. And as you can see here with the chart of Apple, where we get this big move up right here, this is coming into earnings, folks. If you really want to know how we utilize this. This tells me that option traders are getting nervous. Earnings come out, then that big gasp of air happened. But Apple, really kind of defied everybody. Everyone thought when this thing dropped to new lows that, oh boy, we're going to be going down into the 150s.
Right.
Then we get an earnings report, and here's the thing. This is the interesting part about the earnings report. They missed.
It was a bad report.
And all of a sudden, in the last week and a half, we've gone from 165 to 180 and change, 180, 182, this thing's going higher. What's going on? You think that, at the end of the day, everybody just wants to own Apple because even though they're missing crazy numbers, even though they're still trading at a 1920 PE. Is that right? I think it's 1920 PE.
I think they're a little higher than a 20 now.
They may be. You know what is?
Yeah.
I'm thinking of the overall market, but still, they're trading, even though they're not a growth stock anymore. They're becoming just this constant engine of profits, and they've become more of a measure of safety. Amazon, last 2 weeks, I'm just going to hit them real quick. 120 to now in the 140s. This is an alpha move. This is an alpha move, much greater than the overall stock market. Meta. So Meta dropped all the way down to 280 before, and this was even after its earnings. It dropped for a day or two and did a complete reverse course, 280 to the 320s. That's a 40-point move. Okay, it's a 40-point move, folks. Take a look at Google. Now, Google's probably the weakest of the bunch because after its earnings, this thing dropped really hard. It snuffed out a couple days down around 120, but we're back above 130 now.
Yep.
Take a look at Tesla. Tesla's just, it's just a stock that just wants to move higher. Everybody's saying it's a $300 stock. All the bulls say it's a $300 stock, but all the bears are saying, look at all the competition that they have.
Yep.
I do think down the road, Tesla's going to be a fantastic play, but I don't think it's going to be because of their cars. I think it's going to be because of the batteries, the gigafactory, and the way that now, I mean, this whole electric car thing, it's, to me, I've got a few cars. One of them's a Tesla. And I like the fact that I've got kind of hedged here so that if we have a gas shortage, you can jump in the electric vehicle. But here's the thing about electric vehicles. Tesla started out, if you bought a Tesla, you could get free juice, free electricity at their fill-up stations, we would call it that. The Tesla batteries, the big mega batteries. Yep. They'll charge up your vehicle, the charging stations, very quick. But after that first round, and that was back when they were selling the Model S back in 2016, 2017, then they turned that off. They said, oh, we'll give you free electricity if you refer somebody to buy a Tesla. That was around 2019, 2020. Now they're not doing that anymore. And this is what I'm hearing. Now what I'm hearing is if you go to a charging station, they're going to change the way they charge you. Instead of charging you for the amount of electricity that goes in your vehicle, they're going to charge you for the amount of time you're hooked in. So, if you're screwing around and you're shopping in a mall and your battery charges up really quick to about 80%, then it starts to trickle in. Right. They're still going to charge you you're going to be charged by the minute instead of by the kilowatt. And that's going to do two things. Well, I think one of the great things is they're going to say, we're doing this because we want people to get off our chargers to make them available for others. And yes, that is true. But you know what? They're going to maximize the amount of sales they're going to be getting off those chargers. And I think that's going to be something, I don't think anybody's talking about that right now. That's going to be a huge revenue boost to Tesla.
You mentioned the Tesla, you think they're going to be switching over to use the Tesla chargers as their standard.
I'm telling you, they did it right being out there first. Yep. Being out there first and making first class quality charging stations.
Yep. And they
did it.
Like the Shell station across the United States for electric vehicles. You're just going to stop there. Yeah.
And then here's NVIDIA. And I got one more. And NVIDIA is in this long sideways move. I mean, you go back to June. This was before that huge earnings report they had where they just made billions and billions of dollars. Yep. Right. And we got another billions and billions of dollars one coming out soon. But sideways right now. NVIDIA, I think, is going to, NVIDIA's plus is that if they keep having earnings reports like the last one they had, this thing's going to take off. This is going to be $1,000 stock. But the bears are saying, but wait, there's AMD, there's competition coming, and they're not going to have these kind of big, just constantly year over year, quarter over quarter growth numbers that they're having now. So that's kind of the dilemma they have. But I'm telling you, they're back at the point where they're about to break above it and move higher.
Yeah, you just nailed it with NVIDIA. I mean, they're going to have at some point their chips will be commoditized just like everybody else, and the prices will come down. But my gosh, two more of these reports, they're going to be the standard for a long time.
And last but not least is Microsoft. Microsoft was at $310 as we came into October. A share. It's at 360 right now. So this one's up about 50 points since October 1st. It is about to hit it's so close right now to its year-to-date high. I mean, we're sitting on it right now. Dare I say 400 because these are the alpha stocks. And if we're going to have the next couple of weeks as green, if all of a sudden what was weakening the market last month is now strengthening the market this month, you should see a good bit of not all of these stocks move higher into the holiday season.
Yep.
Okay. Last but not least, let's talk cryptocurrency. This is a 400-day chart right here of Bitcoin, and I take us all the way back to Sam Bankman-Fried, or who we like to dub Sam Bankrupt and Fried, because he was the last straw on the Bitcoin, the crypto winter, as we call it. But crypto winter actually started with Luna and Celsius crashes earlier in the year 2021, because when we saw Luna crash, we saw Bitcoin drop down to around 16,000. Then Celsius happened, and it also came down, and Bankman-Fried, and that was a triple bottom that happened over months in 2022. Since 2022, the lows that happened, we've just been putting in higher high, lower high, higher high, lower high, higher high, lower high, higher high. Most importantly, let's take this from a 400-day chart. Let's take this to a 75-day chart. You're going to see the most recent up run. It started in the mid-20s, the 26, 25,000 area, and all of a sudden, boom. And what have we been talking about? Well, if Bitcoin gets to 35,000, we're going to be, and stays at 35,000, we're going to create a base to really start to make a run. This move you see right here, CJ, see that one candle where we made that big move up?
Yep.
That was when everyone started thinking that Larry Fink and the folks over at BlackRock were going to get an ETF. And all of a sudden we get that move up. And, it wasn't, you get a lot of rumors where a stock in question, or in this case, cryptocurrency, move up, and the next day it comes right back down. That hasn't happened. We've been building on this, slowly building on this. And all of a sudden now we hit 36,000, I think, if not once, twice in the last week. And so, I've said if we could close above 35,000 for a couple of days, that builds the steam to get us up to the 38 to 40,000 coin area. And that's what it's looking like it's going to do, 38 to 40,000. My prediction is that we'll be closer to 50,000 than we will 30,000 by the time we get to the end of the year. And that doesn't even bring in the halving, which happens in April in Q1 of 2024. I can't believe I'm even saying 2024, but 2024. All right. So I've really got 47,000 as my target by year end. 47,000, and then we go triple digit. We're going into the 100K mark. That's my prediction for the end of 2024. 100K mark, as we are at a crypto winter, and we're going to start a brand new cycle. And that's that cycle, which you might think, oh man, I missed the boat. I don't think the boat is far off the dock right now, because, if you go back, and I've done all this research, shows me that crypto, the year prior to a halving and the year preceding the halving, are the best years in the bunch. So mark my words, we get to the end of 2024 and we're talking 2025, more than likely, no guarantee, but more than likely, Bitcoin and Ethereum and all their little sister coins are going to be the talk of the town again, as they were in 2017. Okay. In that 2016, 2017 realm, as they were, not that long ago. We were at that 2020, 2021, we were hitting brand new highs. So here we are, 22, 23, 24, and 25. It's about every 4 years. We have a presidential cycle every 4 years. We've been having a Bitcoin halving cycle every 4 years. This worked out extremely well for folks that caught that wave. All right. By the way, CJ, I've never sold a Bitcoin yet from my mining over 10 years ago, and even buying. And I've bought a good bit of Bitcoin and Ethereum. I have not sold one.
I don't go as far back with Bitcoin. You were cutting edge, Tom, with the refrigerator size computer in the garage. You were cutting edge, way ahead of me. I have not sold any of mine, but I have not held it nearly as long.
Yeah.
It's interesting. I look at this and hearing what you just said, to bring it back to the market, if Bitcoin makes it up to that 40,000 mark, and I'm looking at my chart right now over here, and I say, well, 40,000 is it. I mean, 15% by the end of the year. That's the target. And maybe even north of that. And then,
Yeah.
as you said, you proceed to 70. But that will also, in terms of, regular everyday investors that maybe aren't in Bitcoin, what's in that for me? Well, that tells you that the risk appetite for this market is back on again. People are buying Bitcoin. And I tell you what, whether it's 2020, 2021, that has always fared well. When you see these rallies in Bitcoin, it has always fared well for the general market, the S&P 500, everybody, because it just tells you, hey, traders are out there and their appetites are alive and well again. Let's go buy other things.
Yeah.
Add that with falling interest rates, or at least leveling interest rates, and you start to make a 2024 that looks pretty good here.
I think so, and we're going to have we're going to have plenty of time to talk about 2024 and our predictions of 2024 as we get in between the holidays. But yeah, this was a good discussion today. So,
Great.
out of the ashes rises the phoenix of the stock market. We'll see where it goes from here, but gosh, looking good so far.
It sure is.
Really
It
is.
sure is.
All right, folks. Well, thank you for joining us on another weekly podcast. And we'll see you again, same time, same channel next week. Bye, everyone.
Have a great week.